money.
We're back now at 7:44, and this morning on Today's Money, the tax man cometh. The April 15th deadline, only 2 weeks away. If you haven't filed yet, attorney Roni Deutch has some tips that you're going to want to know about. She's the author of the Tax Lady's Guide to Beating the IRS. Roni, good morning. Nice to see you. That title worries me. We're not trying to beat them. We're trying to just survive with them, right?
Absolutely. It's very important to distinguish beating the IRS and saving money on your taxes, and that is our goal today.
Man, there are a lot of changes, people. Every year there are changes, and people have to be aware. So for 2009, the personal exemption, for example, has changed. What do we need to know about it?
Certainly, personal exemption. When you claim a child, a stepchild, a foster child, or a spouse, you now get $3,650 as an exemption versus $3,500. The more money you have in your tax return in exemptions, the more you save.
A lot of people in 2009, Roni, lost their jobs.
Yes.
And so they received unemployment compensation. And there's something new they need to know about the tax on that compensation.
Certainly, unemployment compensation is taxable income. Everybody out there who received it would get a 1099-G from the government telling them exactly what they received. Good news, the first $2,400 is not taxable income. That's at least the consolation prize on that issue.
There's something else, and we had interestingly enough, we had a story on this yesterday on our show, multi-generational households. With the tough economy, a lot of children are moving back in with their parents. A lot of parents are moving back in with their children. So you've got these multi-generational households. What's the tax issue involved in that?
Isn't it wonderful to know, Matt, that if you take a family member in or you help them, you are going to save money on your taxes? How? You can claim them as a personal exemption, which is worth, as we discussed, $3,650. But more importantly, your filing status may have changed. No longer will you file single, which is only worth $5,700. Instead, you can maybe qualify as head of household, which is worth $8,350.
Let me just make sure I understand this. We only talking about immediate family, in other words, children or parents? Does this work for aunts and uncles and cousins as well?
Yes, thank you for bringing that up. I'm an auntie, and of course it qualifies. If you're an aunt, an uncle, grandma, grandpa, regardless of that title, Matt, if you're supporting somebody, you're going to be able to take advantage on your tax return.
Quickly, we want to point out some important tax credits. And as we do that, let's make sure that people understand the difference between a tax credit and a tax deduction.
Tax deduction merely reduces your taxable income, but a tax credit is like gold. It reduces your liability dollar for dollar. If you owe the IRS $10,000, Matt, and you have a $10,000 tax credit, it wipes your slate clean.
And so a couple to remember, the American Opportunity Education Credit.
American Opportunity Education is fantastic. You send a child to college, you're going to get $2,500 in tax credits per year for 4 years. How wonderful is that? Send a kid to college, get a tax credit.
And real quickly, the first-time home buyer credit does not only apply to first-time home buyers.
Yes, it also applies to repeat home buyers, and it's worth $6,500 if you qualify. With housing prices at all-time lows, great time to buy a home. Secure that contract by April 30th. Take advantage now.
And even if you have issues, file your tax report because the penalties are not something you want to deal with. Roni Deutch. Roni, thanks very much.
Thank you so much.
Appreciate it. You can find more tax tips on our website. Of course, that is at todayshow.com.